Good afternoon, everybody. Welcome. Thank you all so much for joining us today. I'm Josh Schimmels, publisher and CEO of the Los Angeles Business Journal. It's an honor to host you for what is now our 2026 Market Outlook and Trends discussion. We are excited to bring you a great program today. It's obviously yet another pivotal and important moment here in Los Angeles. As we look ahead into the year, business leaders across the region are navigating. Once again, it's a mix of uncertainty with opportunity. We're seeing shifting capital markets, changes in real estate dynamics, and obviously a lot of attention is being driven by major sports and cultural events that we're going to see in our region this year, next year, and the following. Today's conversations are designed to help cut through the noise and focus on what's next, where momentum is building, where risks remain, what new risks might come up on the horizon, and how leaders can best position themselves this year and for years ahead. So this afternoon, we're going to hold three distinct but equally important discussions. We're going to start off with the 2026 economic outlook, focusing on where momentum is building across markets, labor, trade, growth sectors throughout the region. Then we're going to move to the state of commercial real estate as I get to have a one-on-one broker conversation. This discussion will be a little bit shorter than the other two, but we're going to discuss how things like valuations are adjusting, how redevelopment and tenant improvement is moving forward, where the new opportunities are beginning to emerge as well. And then finally, we'll talk about the business of sports. This is exciting. This is fun. We get to examine how upcoming worldwide events are driving economic growth, community investment, and global visibility for our region. One other thing I wanted to mention before we get started, throughout the program, you'll be seeing audience poll questions that we'll be incorporating. So when you see them pop up on your screen, we encourage you to participate and respond. We'll then share these results following the event, both on our website and in Monday's print edition of the LA Business Journal. Before we officially begin, I'd like to take a moment to thank each of our sponsors. We can't do this without your support. Thank you all for being a part of our community of business. So thank you so much to Alan Matkins, Big Brothers Big Sisters of Greater Los Angeles, City of Inglewood, Kidder Matthews, Objective Investment Banking and Valuation, Polsinelli, and the Port of Los Angeles. Thank you all so much. We appreciate your partnership. All right, we've got a lot of great content, so we're going to get right into our first discussion, which is a 2026 economic outlook. It's my pleasure to introduce first Channing Hamlet, Managing Director, Objective Investment Banking and Valuation, Brock Mosley, Partner, Senior Wealth Advisor, Composition Wealth, and Chairman Emeritus, and member of the Board of Directors with Big Brothers Big Sisters of Greater Los Angeles, Lindsay Ryan, Shareholder, Employment Advice and Investigations Vice Chair at Polsinelli, Gene Soroka, Executive Director, Port of Los Angeles. And moderating this discussion, please welcome Anant Patel, Advisory Services Practice Leader, Partner with GHJ. Anant, welcome. I'm going to turn it over to you now.
Thank you, Josh. And you certainly teed it up, whether you said disruption or uncertainty and opportunity in terms of what we've been through in 2025, but probably in the last few years. And if I think about the conversation about 2026, let me start off and kick off with a question for each of the panelists. And Channing, I'll start with you. What signals are you seeing, or what one element that comes to your mind that gives you some optimism or confidence as we approach 2026?
Yeah, thanks for having me. It's interesting. My primary business is working with business owners to help them sell their companies. And over the past couple of weeks at the beginning of this year, I've been spending a lot of time talking to buyers, both strategic buyers and private equity firms. And I think in general, I think there's a feeling that the economic environment is stabilizing. There was a lot of turmoil last year with tariff policy and other policies. I think people are feeling like that has been absorbed in the system, and there's a lot of capital available. And so with rumors of interest rates dropping, a lot of capital available, the new tax law, there's a lot of optimism about investment and growth this year. So I'm really optimistic about what 2026 is going to bring.
So appreciate it, Channing. Starting off with the optimism that you share. Same question to you, Gene. What's one thing that gives you a lot of optimism and confidence for 2026?
Well, the sheer size of the U.S. economy and if we can continue to grow between 2 and 3% economically, that's quite powerful. But there are a lot of bumps out there. And again, it was just stated, the trade policy issue. And unfortunately, that's not going away. We just saw the trade balance numbers come out this morning, and you can't judge them on just 1 month. But the gap widened once again, mainly on the heels of that policy. And more recent threats against Europe and South Korea continue. But again, the American consumer has been resilient. American business and reported earnings are strong, yet capital investment and hiring seem to be really lagging compared to what we've seen in the recent past.
Lindsay, on to you. Same question to you. What gives you some confidence for 2026?
Yeah, well, thanks for having me. From my seat as a California employment attorney, the signals that give me confidence are really based on what I'm seeing employers do on the ground. And what I'm observing right now are companies getting more disciplined about workforce planning. We just mentioned hiring. Even when they're cautious on headcount, they're investing in the roles that drive the business, being much clearer about job design, pay ranges, expectations. They're doing that in response to recent California legislation, but that kind of clarity usually correlates with healthier hiring, better retention. So that gives me some confidence. Seeing some real focus on manager capability, so training, consistent performance management, documentation. When leaders handle performance and change well, you see fewer surprises, less turnover, fewer fire drill situations. Employers are getting more creative around flexibility, mostly in response to uncertainty, and without trying to cut corners. California employers deal with very strict rules. So instead of just an attitude of let's just 1099 this job, I think, better operators are using cross training, internal mobility, smarter scheduling, and kind of targeted use of staffing partners. So that's a more durable kind of agility that gives me optimism. And just, on an LA specific note, I think we all know that parts of the entertainment ecosystem are clearly under strain right now. I'm seeing a lot of layoffs there, but even that is pushing many employers to be more strategic, protecting key talent, designing more resilient teams. So those are kinds of moves that I think position companies to kind of capture opportunity when the market turns.
Thank you, Lindsay. And then finally to you, Brock. Obviously, you have front end seat to how investors think. What's giving you some optimism for 2026?
Well, the wall of worry has been climbed. It's been pushed back. I'm shocked at the performance this year. I work with a lot of business owners. Obviously, very in touch with the investment banking community. Deal flow is happening. You're seeing economic activity continue to happen. But when you have this type of return, and it's driven by fundamentals, earnings are strong, they remain strong. And you see new business owners or CEOs or C-suite executives talking about reinvesting. And now you have some clarity, as was mentioned before, on some tax policy, whether or not you agree with it or not, you have a little bit more clarity. And with clarity, you can start to make decisions. So I'm seeing that from business owners. There's a lot of stress about what's going to happen next, but optimism comes from also, my other life is being very involved in philanthropy and seeing, focusing on the human capital component. Can you be in a more diverse, city with as much human capital as possible, with so many different backgrounds and so many different skill sets that we can leverage as a city? So I'm much more optimistic than I was to start off last year, and I'm hoping that some of the growth continues and people continue to spend money and economic activity continues to happen.
Thank you, Brock. And it certainly does seem that, in the midst of disruption and certainly choppy times that we're facing and we have faced, LA is such a resilient marketplace, full of middle market, innovative companies. So it's really good to see the positive aspects that we bring and in terms of how we think 2026 will shape out. Question for you, Channing, and you and I obviously work in the dual side of the world. Interest rates have softened, I would say, in the last few months. The Feds came out today or yesterday with a bit of a pause. That and other elements that you see, Shannon, in terms of capital markets, whether it's debt or equity, what should business leaders expect for 2026?
I think I touched on this a little bit earlier in my introduction, but I'm generally optimistic about 2026 for a lot of the reasons that were talked about here. I think last year, just as an example, I was working with a company in the consumer space that sourced product in China. And when the tariff policy was changing in the first half of the year, that deal went on hold. Fast forward 6 to 9 months later, that company had one of its best years yet. The tariff policy didn't slow it down. The consumer remained strong. They continued to grow. And I think people are starting to realize that some of these policy shifts are not having the impact that everyone was concerned about, and things are stabilizing. So with that, a lower interest rate environment, kind of moderating inflation, and some of the investment incentives in the new tax policy, it feels to me like we're starting the year with a tailwind, and that's what I'm hearing from business owners and investors alike. Everybody's optimistic about sort of what the investment community and capital markets will look like, and everybody's also optimistic about the deal environment. The one wrinkle I see is that investors are being still very, very cautious. And so due diligence is difficult. If companies have issues or things like that, it's much harder to work through. So it's not 2021 again, where everything was like unicorns and rainbows. It's still a little bit of a mixed market, but I do feel like there's a tailwind and a general optimism that wasn't there 12 months ago. So I'm feeling good about where things are going.
And Shannon, I think we've seen, and you'd probably agree, access to capital, access to liquidity is there. It wasn't there a few years back, but certainly there's plentiful of capital chasing good assets out there. Lindsay, if I turn the tables, and you touched on it in your introduction in regards to how companies think about workforce planning, labor. I just saw the Wall Street Journal article about a lot of larger companies that had a pent-up demand in hiring for a while. It's maybe softened up. What's your perspective in terms of how business leaders are thinking about the human aspect of workforce and how they're planning ahead for 2026?
Yeah, I mean, I think we did touch upon this earlier, the primary shift in 2026 is that labor is more expensive and the cost of getting workforce decisions wrong is higher. So companies are being more intentional, and across the board, I think they're prioritizing productivity and predictability. For hiring purposes, that translates to slower, more selective hiring and clearer job design. So again, I mentioned tighter pay ranges, sharper job descriptions, more careful decisions around classification and overtime exposure. Employers are also spending more time up front on, assessing skills and fit and reference checks, because a bad hire is really costly in this environment. On the retention side, I think the playbook is a little bit more about getting back to basics. So people stay when they have fair pay, clearer expectations, predictable schedules, and a path to grow. I think there's a lot of employers that have been struggling with the decision on whether to bring their workforces back or have hybrid and remote workforces. I actually think that, where you land on that impacts retention less. And it really is more about, do you have these fairness structures in play? Do people feel like they have a clear path for growth at their companies? And then on the workforce planning side, again, companies are building flexibility in similar ways. So cross-training, internal mobility, better scheduling, and scenario planning so that they can scale up or down without creating whiplash. And I think the theme is, be agile, don't cut corners, because in California, compliance and employee relations costs, it will wipe out any savings that you have if you try and cut corners.
Thank you, Lindsay. Brock, certainly we had one of the biggest tax bills last year. Thinking about that and thinking about maybe what's around the corner for future tax planning, estate planning, and so forth, how are high net worth individuals or families thinking about kind of the outlook from a investment perspective for 2026?
Yeah, well, I mean, we know what our taxes are now. We don't know what they'll be in 5 years from now and what the estate tax exemptions are. So the challenge we always have is everyone thinks estate tax planning is about just, paying the least in taxes when you pass. That's not what estate tax planning should be. It should be much more dynamic than that, right? And you had so much wealth being created over the years, it's gotten much more complicated, right? So what I'm dealing with a lot more is just really about strategies, right? You can find strategies whether or not the state taxes go up or go down or whatever. There's a lot of things you can do. But how do you sort of work with families to figure out how do they maintain control? How do we really start to deal with this idea of friction amongst family members when people pass? That's a real big challenge that we have, next generation, second, third generation. Wealth being created. So we've been really focused more on that, right? Really focusing, getting people to understand that, we look at their legacy as just energy that's going to be passed on to the next generation. So how do we think critically about that? There's a lot of tools you can use, but one of the things we always try to say is, be very, very careful because we don't want to solve to tomorrow's tax problem and create a bigger issue today, right? And something you're going to regret today. So just being adaptable, understanding that change is happening, and talking through these uncomfortable situations, talking about what happens when you're not here any longer is a tough conversation. But at least we do know that you have the higher levels right now with taxes, so you have a little bit of room. We're not in a hurry to make those changes. We probably have a few more years before we see major other changes that we'll have to address.
Thank you. Gene, you mentioned obviously 12 months ago, the conversations and the avalanche of business owners trying to figure out how to think about tariffs, how to think about supply chain and so forth. We're a year ahead now. Maybe give some thought, Gene, to how you think 2026 will continue to develop in terms of the eyes of the importers, exporters, and consumers, and the impact of tariffs, which is still bubbling along. What's your perspective for 2026?
Yeah, again, I'm still pretty bullish overall, but there are things that we watch very closely, Anant. Footwear, furniture, coffee, and bananas are all up 10% year over year. And while interest rates are softening, as was just stated, inflation is moderate, not exactly where everybody would like it. The conversation nationally is around affordability. And that will continue to persist. The cost of a new automobile now in the United States is over $50,000 for the first time. So there are real pockets of concern and work that has to be done. Yet, large economy, some good things happening. And for us at the port, we have to invest through cycle. So we can't get bogged down by a budget, a singular economic episode, or even an election cycle. And that's why we'll continue to do just that, building our first new container terminal in a generation, expanding one of our most popular facilities to handle bigger, cleaner ships and more cargo. We're going to be building a new bridge someday in the not too distant future that will be funded by private equity and supported through this industry, not taxpayer dollars. So we're going to continue to see just that because it's not a straight line, yet the building blocks of this and financial stability at a location like ours as an infrastructure agency gives me real hope. And this year alone, I think we're able to navigate just a little bit better than we saw last year, so long as we don't get 110 announcements on trade policy emanating from Washington once again.
Thank you, Eugene. I'm going to throw it back to you, Shannon, now in terms of really the deal community, the middle market, sentiment for the buyers and sellers, business owners that may have paused in the last couple of years, not to maybe because of valuation expectations, because of maybe just managing their business, figuring out what tariffs means. What's your perspective in terms of middle market M&A timing? A better place for sellers to go out? What's your sense of how 2026 is going to shape out for the M&A deal community?
Just before I jump into that, I just want to echo something Gene said. I think the uncertainty that was created by changing announcements caused everybody to kind of sit on their hands. And so really hopeful that there's just a little bit more certainty this year, because I think in my world, the investment community and the deal market, having some sense of what the policy is so that people can make plans and having certainty is like really critical. And so hopefully the trade policy and some of the other policies stop moving around and stabilize. I almost don't think it matters what the policies are as long as there's clarity on what they're going to be so people can make decisions. But Anant, to your question, one of the things that I've seen over the last couple of years is I believe in the lower middle market and transactions maybe $100 million and under. I think more than half of those transactions are catalyzed by a buyer reaching out to a seller and engaging them rather than a seller doing a formal proactive process to sell their company. And so I think the advice I would give to business owners is to do the planning and be ready, because when a buyer reaches out to you and you're not ready, you can really lose or miss out on an opportunity. If you're ready and you've thought about it and you have your ducks in a row, that gives you the ability to put a premium transaction together quickly and not sort of be scrambling and playing catch up. And so, again, I think a lot of the deals in the last couple of years, 3-4 years, have been catalyzed by a buyer reaching out. And the sellers that do well have thought about this and are ready. So the biggest piece of advice is failing to plan is planning to fail.
And you would probably say, chiming in now, being ready is not the day before you decide to sell, but really put your systems, processes in place well ahead of that situation.
Yeah, I mean, I think there's a whole series of different things that people need to do to be ready. There's personal planning, financial planning, tax planning, and then making sure the business is ready as far as really making sure the business is transferable, systems, management, processes, infrastructure, et cetera.
We can't have a conversation without the two letters A and I, right? We've been flooded with the impact of AI in many different aspects of businesses. Lindsay, throw it to you in terms of how you think about AI from a labor perspective, how companies are making decisions, and is it going to take my job away? What's going to happen? Maybe some thoughts of how AI for 2026 is going to evolve from a labor perspective.
Yeah. I mean, from an employment standpoint, the biggest risk with AI and automation, it's not the technology itself. It's really, it moving faster than your policies and your managers and your compliance controls. So one of the biggest risks that I'm constantly speaking with clients about right now are the discrimination and bias risks tied to AI. So if AI is being used to screen applicants, to rank employees, to make promotion and pay decisions, you need to know what it's optimizing for. You need to know whether it creates disparate impact, even if it's not intentional. And there should be always a human element still to all decisions that you're making in conjunction with the use of those AI tools, so that you can explain those hiring and promotion decisions. If you can't audit it or you're not auditing it, you're going to have risk and you're going to be in a difficult position to defend it. And then there's, of course, just the privacy and data concerns. Usually these tools are collecting performance data, communications. In some cases, they're even collecting biometric data. And in California, with our, privacy statutes, that raises real issues around what kind of notice are you providing? How is employee information being used and retained? So it's something to keep a close eye on. And then, as you mentioned, there's just the employee relations and morale concerns. So, the fastest way to derail adoption of AI in your workplace is poor change management. So if you roll out that AI without clear guardrails, without training, without a credible message about what's going to change and what doesn't, you are going to have employees that fear displacement. You're going to have managers that, are resisting the change or, fear loss of control. You're going to have a C-suite that worries about compliance. And all of these kinds of concerns is what can drive attrition or even unionization efforts. So you need to be, mindful of how you're implementing the rollout of AI and not, rushing too fast. I think just my practical take-home advice when it comes, to employers when it comes to AI is, treat it like any high impact employment decision. Put governance around it, do vendor diligence, do bias testing, have clear policies, privacy guardrails, and manager training, so that you get the efficiency gains without creating a compliance issue or, huge employee relations disaster. Because there are a lot of opportunities there, but there's also a lot of landmines to watch out for.
I'm shaking my head in total agreement, Lindsay, in terms of how we're thinking about our firm as an accounting firm. And a question to you, Brock, as advisors, right? Trusted advisors. Clients have a lot of data and they're doing their own searching and AI and so forth, and understanding, the issue that they have. And in your world, Brock, how is AI, to the extent it has access to broader investors and so forth, how does it impact you as a trusted advisor? Does it change in the way that you communicate with investors? What does that mean in your world, Brock?
Well, yeah, it has tremendously. I mean, there's a false sense of confidence that people have when they get data from an AI generated source, right? We've had clients come in here with wills or even estate plans that they thought were sort of well thought out. They look beautiful. They look like what you would typically have. But when you dig into the nuances of it, it's so far off and doesn't even, can't live up to the legal scrutiny and what their goals are. So one of the challenges is not to beat down technology, because you're never going to beat AI on like speed of data or any of these types of things. But in the advisory community, it's just about the nuance, right? Things are more complex, right? Understanding the entire picture of someone and what their goals have been, not just from a year ago or 2 years ago, getting to Channing's point, right? If you want to, we have clients that are business owners. They want to sell a business. Well, it doesn't start like, let's go sell a business today. It's a 2 or 3 year plan to set up systems, to get that company ready to sell, make sure it's in the right entities. All of that is a conversation, right? It's all about knowing exactly what the client, and that kind of information just cannot be fed through a system and just kind of spit something out. There's just too many moving parts. And so from an advisory standpoint, I think that the information that we know, and we've known it for years, and we tried things 6 years ago, and they're just being renamed. Robo-advisors, just AI for investments, some years ago. Like, how did those things work? Where do they fall apart? Having that experience, knowing who the client is, knowing what their experience has been, that's everything for creating comfort, right? You could be right, you could be wrong, but having the information and knowing and having some background that isn't just sort of, A and B and C, it makes all the difference for comfort level for the high net worth community. So that's where we're focused. We're utilizing AI, as everyone is, to help make certain decisions. But as complexity increases, we're finding that the knowledge that we have that can't just easily be put into some algorithm and spit out some optimal solution set, that's not what people are looking for. And this massive amount of uncertainty, this is the time, right? There's so much uncertainty going on. We don't know where laws are going to do. We have to do, assign probabilities to certain outcomes, run through different variables. Yes, AI can help you do some of those things, but the nuanced things, it's just not very strong at. And families need a little bit more comfort and hand-holding during that process.
Yeah. So, Brock, Eugene, I'd be interested to find out from your perspective, and I suspect, yes, AI is impacting ports in terms of the management of the ports, but the supply chain aspect, are there one or two things that come to your mind relative to the impact of AI?
Yeah, absolutely. And we're living and working with this every day. 3 big areas. One is on information flow to design predictive and prescriptive analytics. When something doesn't go to plan, which often happens, how can you react and what solutions could be possible? Compare that speed to offering options with the institutional knowledge of our skilled workforce, and that's when we really become a game changer. Secondly, is around digital twins. We've got marine architects and engineers that have to do a lot of work underneath the water's surface. We have 43 miles of waterfront, whether it's a project or a problem. If they can see through a digital twin what that looks like before they have to put the wetsuit on and go beneath the surface, they can be that much quicker at resolving the issue. And then thirdly, we're using geospatial mapping, especially around traffic flows, which gets us to several levels deeper than just the traditional app that we use in our cars every day, because I've got to decipher between a container truck that's trying to come in and out of the port, a passenger vehicle, a school bus, or a construction vehicle that's moving around, and tell them ahead of time better ways and better paths to take so they can cut down on the amount of time, especially around construction areas and resurfacing of the Vincent Thomas Bridge that we have today. So we're just scratching the surface, but one thing we do know is technology is moving faster than ever. We cannot leave the workforce behind. And that is one of the most polarizing discussions when it comes to robotics on ports and terminals, and why we're building the nation's first goods movement training campus here between the ports of Long Beach and Los Angeles to help upskill workers if you're my vintage, or attract, recruit, and retain younger folks to be that next generation of workforce here.
Thank you, Gene. I'm going to wrap this up with two quick fire questions, actually. I was given one, but I'll have two. Grade of 1 to 10, 10 the most optimistic for 2026. And then that's the first question. Second question, who's going to win the Super Bowl next week, or is it week after? So, Brock, two questions for you.
Man, that's great. Listen, I guess I am by nature an optimistic person. So I believe that, and Gene would probably dig into the numbers more than I would, but any place, any city, seventh largest economy, $800 billion of projected, growth, what a gross metropolitan product, what they call it, not GNP, but GMP. There's so much opportunity here, right? So I have to believe in opportunity. I'm a big brother for years, mentor for years. It's talent, right? Harness the talent, show it the right direction. So I believe LA's got talent in spades, and I think we're going to do great. So that's the first part. Super Bowl.
Is that number 10, Brock, then?
It's a 7 out of 10. I can't give it a 10 because I'm still worried about some of the uncertainty that's out there that everybody has talked about. Super Bowl. I think Seattle's got it. I just think that defense is just too it. That's it.
Lindsay, same questions to you.
I think starting with my optimism, I want to flag up front, I'm not an economist, so, I'm a California employment attorney, but my data, when answering this question is really, what employers are doing with their people. And from that vantage point, I'm going to give it a 6 out of 10, cautiously optimistic. I mentioned this before, but I'm seeing a lot of disciplined decision-making. Companies are being thoughtful about hiring, investing in key talent, really tightening up pay practices and focusing on manager training and retention. And those are usually signs that businesses are planning for the long term and not just bracing for the worst. So that contributes to my, sense of optimism. But at the same time, LA is uneven by sector. I mentioned it before, but the entertainment ecosystem's been under real pressure. Budget tightening, layoffs, and that absolutely affects sentiment. But I see many employers adapting there quickly, redesigning roles, upskilling, building more resilient teams. So I'm optimistic. And I think, LA tends to do well when it leans into what it's been good at, and that's reinvention. So I think 2026 will be no different. And I'm also going to go Seahawks purely out of family loyalty. But we'll see.
Gene, 1 out of 10, and who's going to win the Super Bowl?
I'm 7.5 to 8. I'm along with our panelists today that I think we've got a lot of good momentum. Couple pockets I'd like to see downtown pick up a little bit, whether it be the vacancy rates on commercial buildings or just the pure activity downtown. But for that, Century City, the Valley, even the South Bay Area are really humming. And that creativity and that imagination. It's an election year. I think people are going to get excited about alignment with policies. We've got the World Cup coming in for some matches. We're getting prepared for the 34th Olympiad. All that buildup is going to make 26 a really special year here in Los Angeles. I, too, am going with the Seahawks, but I might think about taking New England plus the points. Yet I think straight up Seattle comes out a winner.
There you are. Shannon, close it out for us.
I was on mute. I'll learn eventually. As a business owner and entrepreneur, I have to be optimistic. So I'm 8 out of 10. I think there's definitely some potential speed bumps and headwinds in various areas that the panelists spoke about. But I'm going to choose to ignore those and be the optimist on the panel. And then I think it's going to be a good game, and probably going for the Seahawks.
So 7 out of 10 for me and Seahawks. Unfortunately, LA are not there, but we'll go for Seahawks. I truly appreciate the opportunity to moderate this quick panel and thank the panelists. I'm going to send it back to Josh.
Thank you so much. What a great first panel. Anand, Gene, Lindsay, Brock, Channing, appreciate all of your insights and your thoughts. Okay, so next we're going to do something a little bit different. We've got a shorter conversation. This one's going to be about 12 minutes or so, but it's 100% hyper-focused on commercial real estate. This is an industry, as we know, that continues to sit at the center of so many economic shifts, and I get to have a one-on-one conversation. Please welcome our local expert from Kidder Matthews, Senior Vice President, Managing Director, Sherman Oaks, Fred Aframian. Fred, so glad to have you here. Let's jump right into things. Let's talk commercial real estate in Los Angeles. As we know, this industry continues to have to weather a lot. Recently, it's been inflation, higher interest rates, though we're starting to see some shifts in that area. We're seeing demand all over the place, from COVID changes to post-COVID. We're seeing a lot of things happen with regulatory pressure, and a lot of this happens all at once. So my question for you is, from where you sit, how would you characterize the current state of commercial real estate in LA? Are we stabilizing? Are we resetting? Or are things still very much in transition? What are your thoughts?
Thanks, Josh, and thanks for having me. I would say it's been a very rough few years, and we're definitely not out of the woods. I would say the shock phase is over of higher interest rates, but we're definitely not at a stable environment yet. There's still a lot of issues with mostly legislative, I would say, and some sectors are doing well, while others are still suffering, like select multifamily, older rent stabilized projects. Office, of course, is not doing great, but you're seeing some stability and some price normalcy, I would say, in retail, grocery anchored, especially shopping centers, and well located multifamily Class A product. So it's a mixed bag. There's some positives, there's some negatives, and there's some winners and some losers, I guess.
Yeah, we just finished our all of our nomination process for our annual Commercial Real Estate Awards, and I see that there are a lot of deals that have gotten done in the last year. May not be breaking records, but they are happening. So let me ask you this: from a valuation standpoint, where are buyers and sellers still apart, and what are we doing to close the gaps? Are you seeing what I'm seeing, which is deals are getting done? What's the deal landscape look like?
Yeah. No, it's a great question. And I think that's what a lot of people are wondering. And you're definitely seeing deals. There's no question. I think it's a lot of forced sales, rather debt or partnership kind of dissolution sales, or there's no more equity, so you're just kind of turning over the keys and walking away, and those are turning into sales. It's hard to really say that's a great time to sell right now. I mean, there are some great deals that kind of close that you can point to and say, looking back, that was a good deal, and you can tout that they had some upside and potential for the buyer. But overall, like I said, office not doing great, older multifamily not doing great. I think it's also tough to really pencil value add deals, even if it's retail, because you just have such high cost of construction, high debt, and it's just kind of challenging to see the upside or the future being bright right now with kind of businesses having the challenges. I mean, you heard the panel before. There's a lot of challenges out there for small businesses, small to medium-sized businesses. So it's challenging to pencil a bright, landing on some of these assets.
Yeah, I mean, one of the areas that I think we've seen a little bit of positive uptick in redevelopment, tenant improvement. We're seeing a lot of, especially on the office side, professional service firms really kind of revamping their space. Do you see that as an area of opportunity? Do you see challenges? And if you do see challenges, is it financing? Is it regulation? Is it community pushback? What are we seeing in that redevelopment project space?
I would say, I mean, depending on sector, the cost of construction is extremely high and doesn't seem like it's coming down anytime soon. We're looking at new office space, and the build out for our office space is, shell shocking. But there's motivation from the landlord side to help us out. Regulatory for sure. I mean, I'm sure everyone's familiar with ULA transfer tax. It's been detrimental for development across the board. Redevelopment as well. I mean, the city's become your silent partner all of a sudden on every deal above $5 and $10 million, and deals aren't getting done. They're not getting entitled. And at some point, the capital just doesn't make sense, so they don't deploy it out here and go somewhere else. The regulatory environment's been very challenging in LA on a number of fronts. So it's really stopping investors from coming in. There is capital out there, and LA's always been a tight market that developers love to come in and build because there's such a demand for product, but they're just not, because at the end of the day, when the city's going to take 6% off the top, it's hard to make a deal work.
Well, if we look historically and we look back in time, we know that typically when resets occur, there's always creates some type of opportunity at some point in the future. And you mentioned that, hey, there is capital, it's out there. What would you say the most compelling opportunities today are for that capital that perhaps we didn't even see a year ago or 2 years ago? That might be surprising to some.
Right. I mean, the asset classes that are getting the most traction are industrial, retail, and kind of well-positioned, maybe multifamily that has some potential to have some rent growth over the next few years. We sold a site in Santa Monica that was zoned industrial and had a okay tenant in there and was performing, but there was a real potential for future development and not for multifamily, which, Santa Monica is such a high rent market, because of the regulatory environment, but the developer is going to potentially look to build like an industrial product in there, which, historically you never thought of Santa Monica as an industrial project. So that was an interesting project. You're also seeing mispriced retail be very attractive, where there's upside, because retail at the end of the day, there seems to be a lot of demand for it, which 2 years ago or 4 years ago, there wasn't. So retail industrial seems to get a lot of traction, even if it's older and requires some heavy lifting.
So, I mean, real quick on the industrial side. So we saw during COVID just off the chart record breaking industrial expansion. And then we saw a little bit of a correction in the market, but it sounds like you're optimistic again.
I'm a broker, just like the panel before. You have to come in every day and hope the best and wish the best. And it's been challenging, but a lot of people are thinking 2026 is going to be the rebound year.
So, all right. So what asset class would you say is under the most pressure as we head into the next cycle?
I think everyone would agree office.
And is that we read, we see the deals, we see what's happening. We see some foreclosures and some major sales downtown. Let's put downtown aside for a moment.
Sure.
We see the West Side hot in the office market. What are some other areas of opportunity that you see positive in the office market that might help relieve some of this office pressure?
I guess one positive is they're not building any more office. So the current inventory is what's going to be there, for the foreseeable future. I mean, there's definitely pockets that are doing great. I would say, West Side, Century City's been doing phenomenal. The challenge with office is obviously no surprise. Not everyone's going back to work, and it's expensive to build out. So where historically it was kind of like a given, where an office user would be in their office and expand and have employees coming in, and the TIs were reasonable. Now it's like, well, we're not having people come back in. We're working remotely. We need space here and there. We're smaller footprint. And by the way, the TIs are, $200 a square foot. So
we're seeing a lot of, like you said, the compression of the footprints. But a lot of those savings and costs are being absorbed by really high costing TI. right
Yep.
now.
Yep.
So, your savings, you might have a nicer space, but you're going to have fewer square feet and it's going to cost you at the same time. So yeah, we're definitely seeing that as a challenge. Okay, so I've got two last questions.
Yeah.
On real estate. We know that Los Angeles, it's fundamentally different from other major markets. Okay. Why does that distinction matter for investors and occupiers, that we are a different market than others in the country?
Well, LA is just, I mean, first its size. We are, I think a panel mentioned, we're the seventh largest market, I think, in the world. And just sheer, when you look at the geography that we cover, I mean, we're ginormous. And I think we have challenges that I think some of the other big cities have, which I think our regulatory environment is just challenging, which is a double-edged sword. When you own product out here, it's kind of a given because you can't recreate it. Or it's difficult to recreate it. So there's a built-in scarcity, which is helpful, but it's also an unknown where you're coming in here and not knowing what rent you can charge or what your build-outs are going to be or what kind of tenant you're going to have. And, you're seeing that in the film production industry where that was such a leading market. And now, you're seeing Hackman Capital give up one of their biggest assets. And it's tough, you don't know what is around the corner regulatory wise.
Fair enough. Okay, so let me ask you this, and this is sort of a closing out this discussion question. You started off the conversation talking about, you're not sure what advice you would give, whether it's buy, sell, hold, reposition assets, but that's still something that our listeners, our viewers, our readers of the Business Journal, they want to know. Investors and owners are facing tough decisions right now. What advice are you giving to your clients who are trying to decide today, do I hold, sell, or reposition assets in this market?
Right. It's a great question. I would say it goes against my own financial well-being, but the best decision right now is if you can, is to hold. If you have good debt or the project is cash flowing, you're not having to feed it. Because there's got to be some light at the end of the tunnel. We're all optimistic. I think we're all assuming that the interest rates are going to go down. Like I said, there's a lot of capital that wants to come in the market. So if something gives, if we have better, political environment and there's some sway in the winds to maybe deregulate or less regulate stuff, I think there's an optimism that the market would rebound pretty strongly. LA at the end of the day is one of the biggest markets. And there's a huge potential for it to rebound in a big way. And then if you don't, and the project is sucking wind or costing a lot, and there's no immediate light at the end of the tunnel, I would say sell it, but that should be a second and third choice maybe.
Fair enough. Well, I appreciate that. Thank you for the one-on-one time and for sharing your insights. Commercial real estate and the trends that follow are incredibly important to our content each week. So we'll continue to write about it. We'll continue to look for insights. Thank you for sharing. I appreciate it. Thanks, Fred.
Appreciate it, Josh. Thank you.
All right. So we are going to close out the program, shifting to another topic that's really becoming increasingly central to our economic future of the region, and that is the business of sports. We all know it. We've seen it. We've read it over the next several years. Los Angeles is going to be hosting the World Cup, another Super Bowl, and the Olympics, all on a world stage, a convergence that may truly be once in a lifetime or once in a generation type situation from a business standpoint. Let's get into our final discussion and let's meet our speakers. First off, our friend, Mayor James Butts with the City of Inglewood, Kathy Schlossman, President and CEO, Los Angeles Sports and Entertainment Commission. And moderating the conversation, Ari Sheps, partner with Allen Matkins. Ari, I'm going to hand it over to you. Welcome.
Thank you for the introduction, Josh. This has been super informative. So in preparing for this discussion and looking at the pipeline of events that are coming to LA, I don't think I even realized the gravity of what's coming to the city. So as an Angelino and a sports fan, I couldn't really be more excited for this discussion. First question is going to be for both of you. LA is entering an unprecedented era with the World Cup, Olympics, another Super Bowl, and multiple global events all converging in LA within just a few years. From your perspectives, what makes this era of sports in LA truly unprecedented? And why is it so important that we get it right? Kathy, let's start with you.
Okay, thanks, Ari. And I'm so happy to be sharing the stage with my buddy, Mayor Butts. We've been on the speaking tour a little bit promoting this so people like Ari know that these events are coming and how important they are. But I would just like to say that it's very interesting. Once 2026 started, we are on the clock for 3 of the biggest events in the world. No other city in the world has the lineup of major events that the Los Angeles region has. I mean, we have this incredible opportunity starting in just a couple of weeks, hosting the NBA All-Star game, first time at the Intuit Dome, followed by the U.S. Women's Open Championship at Riviera Country Club in June, followed by 39 days, 8 matches of the World Cup here in June and July, including the U.S. Men's National Team opener, followed by the Super Bowl in 2027, followed by the Olympic and Paralympic Games in 2028. This is an incredible opportunity. Los Angeles is on the global stage, and we need to make sure we take advantage of it. And the one last thing, I'll just finish my thoughts on that and turn it over to Mayor Butts, is, you asked why it's important. Not only is this event important, World Cup is the largest single sport event in the world, and the media visibility, we'll talk about that later. But with this run up to 2028 and Los Angeles hosting the Olympic and Paralympic Games, the World Cup is also a practice run for 2028. And if we don't do 2026 right and really send a message to the world that Los Angeles is open for business and this is a great region to come and visit, that's not going to be good for our friends at 2028.
Mayor, from Inglewood's perspective, what is the real economic impact of hosting these global events beyond the headlines and cachet?
Well, it really boils down to the circulation value of money and what it means to the region. When someone buys a ticket, they pay somebody's wages. That worker spends part of it elsewhere. That business pays suppliers and employees, and taxes are collected and respent by the government. A good example of what it means, let's take Super Bowl 58. It was estimated that it is worth $100 billion in the circulation value of money. There was visitor spending, hotels and short-term rentals, restaurants and bars, transportation, rideshare, taxis, rental cars, retail entertainment, and then there's money circulated through hospitality workers' wages, vendors and suppliers, local service contracts, state and local tax revenues. You put all that together and you take that $100 billion, it makes a big difference in the ability of cities throughout the county to do infrastructure repairs and provide services for their residents. So it's more than just entertainment. It changes the lifestyle of the county.
Kathy, from your perspective, what are the biggest opportunities to leverage with the heightened global attention on LA's sport and entertainment industries?
So I think there's 3 of the major opportunities, but before I get into that, I just want to mention, I think people need to remember when they're looking at these major events that we collectively are not going after hosting these events just for the 8 matches on the field at SoFi Stadium, just for the championship match at the Super Bowl. It's about what these events collectively bring to the community, economic impact and community impact and visibility. So the 3 biggest opportunities I see are, 1, the opportunities for our local diverse businesses to have a chance to bid on contracts around these major events that will really elevate their opportunities in the future if they're able to land those contracts. And we have a program that's associated called the Business Connect program that helps these local diverse businesses get a foot in the door. That's number 1. Number 2, the tourism industry. This is a huge opportunity for the tourism industry. We are on the international stage with these events. People want to come to Los Angeles, so we need to take advantage of that excitement. They want to go to the World Cup. They want to go to the Super Bowl. And it's not just that they want to go to a match, because most people who come to Los Angeles aren't going to have a ticket for the World Cup. They want to be part of the excitement and all the other events and activities that are going to be going on in our region. And so that's number 2, is the driving business, the tourism industry. And the biggest opportunity I see, Ari, is that we have an incredible opportunity to change the narrative about Los Angeles. We all know that last year was a crummy year for Los Angeles, let's just call it. And the media outside of Los Angeles didn't do us any favors in telling our story. Now we have incredible media attention on the World Cup, on the Super Bowl, on these events coming. We have a chance to tell a different story about Los Angeles and portray what our city is really about. It's not about the fires. It's not about all the other unrest that happened last year. It's about all the great things, the great attractions, the great things to do in our city and why people should come and how everybody is welcome here.
Couldn't be more right. We're a sports and entertainment city and we'll shine. Next one's for you, Mayor Butts. So whether it's tourism, infrastructure investment, brand equity, or long-term private development, how should Inglewood and LA measure the return on investment in these events?
The way that you measure that is what's happened after the last whistle is blown, after the closing ceremonies are done. Where are you and what are you going to do with the investment that's been made in the region? Now, as an example, in Inglewood, we used to be home of the Lakers and the Kings, and we had the racetrack that did 43,000 people a day, 6 days a week. But at the end of the day, Inglewood's brand was such that people just came for the entertainment and they left town. The difference we have now between now and then is that we have invested those returns to increase public safety, to do drastic infrastructure renewal. And as a result, property values have more than quadrupled for a median priced home in Inglewood, from 225 to close to 900,000. We have several many $1-million homes here. And so it's what you do with the revenues, and that would include everyone around us who has hotels that receives TOT and other revenues, what they do with that to make the area more attractive so people come back here for more than just great events.
And Mayor, if I could just already add on, I don't think people realize that all these great events, this run of events we've had since 2022, that's all been under your tenure. I mean, that's been you actively going out and really trying to change what Inglewood's what the perception is out there, and you've done an outstanding job. I mean, that's why we've had this run of events. So thank you.
You see why I love Catherine?
No, it is you. I'm not BSing you.
No, I'm saying that, but you said something that's very true. When I came to the city, back to the city, I was a policeman here from 72 to 91, and then police chief in Santa Monica. Then I ran counterterrorism at the LA World Airport System for 5 years, came back as mayor in 2011. And to make the point, even though we'd had the Kings and the Lakers, they left to go to Staples Center, and horse racing fell down to 1,000 people a day. And we were within 4 months of cash flow bankruptcy in 2011. We weren't going to make payroll. And so it was going to seek out the partnership with Madison Square Garden to reopen the Forum, then with Stan Kroenke and the NFL to bring the football, and then Steve Ballmer and the Clippers. And it's changed. Things have changed because this time we leveraged those economic benefits to build a better city. And now Inglewood has a totally different brand. And the brand is everything. And just like what you asked Catherine earlier, what do we have to do? The reality is we have a once in a lifetime opportunity. I don't think it's once in a generation to have the equivalent of a three-peat world championship in baseball, basketball, or football, so that the area is branded forever as the place to be for major events. And that's why we have to get it right. And we will be able to secure that brand.
Kathy was talking about rewriting stories, which is exactly what you've done, Mayor. So Kathy, looking at the next several years, collectively, how is the Sports and Entertainment Commission approaching these events as a coordinated strategy rather than just isolated events or moments?
Right. In 2016, when Stan Kroenke won the rights to move the Rams back to Inglewood and build this beautiful building that you see behind me, SoFi Stadium, we knew we had this incredible opportunity to bring in all these events. And so what we wanted to do as a city and a region, when most cities get a major event, they'll create a host committee and they'll go out and raise money, because I don't think people realize, by the way, how much money it does cost to bring these events here and put these events on. So as an example, to host World Cup here in the Los Angeles County with all the other activities going on, we're north of $100 million. That money has to be raised privately. And so we said, instead of creating host committees every single time we have a major event, let's create kind of one super host committee across all of these events. So we have a coordinated effort. We learn from once Super Bowl in 2022, we close that down, that effort, that everybody, all the learnings don't go away, because what happens in other cities, who, by the way, only host a major events maybe once every 5 to 10 years, all that information is lost. All the legacy programs and all the good work that was done during that event goes away because all the staff is gone. So what we did is we used the LA Sports and Entertainment Commission as kind of the super host committee, and we expand up or expand down depending on how many events we have at a certain time. But we used the same consultants across all of these events, because we said we have this opportunity leading, it's all the road to 2028. Let's make sure and use the same transportation and safety and security people and start building on the learnings, because hosting the Olympic and Paralympic Games is going to be everybody's got to be involved and everybody's got to help. But why not do some practice runs on the 2022 Super Bowl, the 2023 College Football Playoff, the 26 World Cup, 27 Super Bowl, NBA All-Star, et cetera. And so and use the same team and experts. And more importantly, because we do have turnover at City Hall, occasionally with experts, we have the same people, carrying that institutional learning and learning off the mistakes from before, making sure we are hosting a much better visitor experience every time we do it, and not just starting over. So you asked me, what are we doing differently? This coordinated strategy of building on that as we go forward is something new. It hasn't been done in other cities. And we have this, now we're hitting this 3-year runway, 26, 7, and 8, where we have the world's biggest events here. And we need to perform, because this city needs to, everybody, this isn't just the host committee. This isn't Mayor Butts' office. This isn't Mayor Bass's office. This is everybody has to get together. We all collectively need to make sure anybody who is coming to our city feels welcome, wants to come back, because this is a giant commercial. We are on the global stage. All eyes are on us. How are we going to do? And everybody needs to make sure that the visitor experience is a good one.
That's great.
If I could add to that?
Of course.
I want to tell you, Catherine brings up a very, very good point. I've been in municipal government for 53 years, worked for 3 different cities, this one twice. And I was the venue commander for the 84 Olympics. We had basketball at the Forum in Inglewood. But I would tell you this, in all this time, I have never met an individual that has played such a pivotal role as Catherine has in tying everything together, because you have to have symbiosis and synergy, and you have to develop an understanding with all these different organizations, FIFA, LA 28, and everybody they want something, and there has to be somebody that ties everything together so that everybody realizes they can't get everything that they want. And there has to be some shared responsibility for expenses, because these events are expensive to put on. And so I've never told her this, me to her, but I'm just amazed at her capability and what she has done for the county.
Thank you, sir.
And Josh, for you at the end, I need my compliment on moderating the panel. Separate question. In my practice, I've talked with sports teams and a number of developers, and regardless of location, they're all seeking the same thing: to create a complementary ecosystem that drives year-round foot traffic. Inglewood has been incredibly successful in becoming a large-scale mixed-use sports district. So this is my question for you, Mayor. How are modern venues evolving into year-round economic engines for cities, and is there a common denominator?
I think we're somewhat unique. Most times you'll find, like, for instance, for football stadiums, they're on the outskirts of a town, and the area where they're placed are usually kind of desolate when they're not there. People come in and they go. Basketball arenas are somewhat different. They're usually in the center of a city, but you will never find a football stadium, a basketball arena, and a concert arena within 3/4 of a mile from one to the other. And so it's this new paradigm of managing traffic and these enterprises so that while they will have an impact on quality of life when events are going on, we have 5 million people a year, over 400 events a year. But we've developed a traffic direction matrix and a public safety matrix that has allowed it to have minimal impact while giving maximum economic advantage to a community that was considered deprived before. And so now we have residents that have generational wealth to pass on to their children. Our public safety profile has reversed itself completely through a lot of hard work from the police department and support from the city council. And so I think that we are fairly unique in that I don't know that you'll find another place that has all three types of venues so close to one another, but coexisting with the community.
So on a related point, you kind of touched upon this earlier in terms of value appreciation for homes. How do major sports venues and events drive surrounding real estate development, tourism, and small business growth, especially in a place like Inglewood?
Well, see, again, they can if things are managed properly, because we had a basketball team, a hockey team, and the racetrack, but it didn't drive investment in the city. Cities have to be managed properly. They have to leverage the revenues that come in to make the city more desirable. And if you do that, then what's going to happen? It's like Field of Dreams. You build it and then they will come. And right now, the LA Philharmonic has moved their youth orchestra program here because of what has happened in Inglewood. The Girl Scouts of Greater Los Angeles left Marina Del Rey. They're 35,000 strong. They're in Inglewood. We just have revolutionized the brand of Inglewood, because everything, just like in business, it's what your brand is, and that's what matters here. The brand of Inglewood is totally changed. Sports and entertainment, safety, great residences. We have people paying top dollar to come and move into the city.
So, Kathy, we talked about the global audience concept a little bit earlier, and the question is, how are local businesses, sponsors, and partners preparing to engage with global audiences, and where do you see any untapped potential?
So the local businesses I mentioned earlier, Business Connect program, but all are doing a lot to try and capture. Everybody wants to capture a contract around the World Cup because it is the largest single sport event in the world. Great opportunity for visibility for their company and a business opportunity as well. Partners, sponsors are looking to activate. They see a great opportunity in the community engagement programs that we have. We actually rolled out yesterday all that's happening leading up to World Cup in the community with Grow the Game clinics and community days and community champions, et cetera. But then opportunities with the FIFA Fan Festival at the Coliseum. We announced 9 official fan zones that'll happen around the region where fans, for very low price, where families can go. It's basically it's a mini fan festival watch party where they can go and with their family, drinks, food, interactive entertainment. That's a great opportunity for the sponsors to activate and to reach the community through those events and other events that will be happening, other community viewing parties as well. And I would just say the last thing is that the sponsors and partners, and where I see the untapped potential, everybody sees the value of these events coming, but everybody does have to step up and support this in some way, somehow, whether it's volunteering to help or whether it's being a greeter. I mean, soup to nuts on opportunities on where people can participate, but everybody should be participating in this, even if they're not a soccer fan or a sports fan, because this event is good for our region.
Got it. Excuse me. So as a follow-up, how do we see this unprecedented stretch of global sports moments translating into real lasting impact for local communities across LA?
Well, you've got the economic impact. The events in 22 and 23 and 24 drove over $1 billion of economic impact. We're expecting another $1 billion from the World Cup and the Super Bowl. So you've got the economic impact, but it really is the community impact and the things that we can do to allow residents and locals to participate. If we did not host a World Cup here in Los Angeles, the majority of people who live here would never have a chance to experience some piece of it. And so there's opportunities that come. There's opportunities for them to volunteer. There's opportunities for them to work on it. There's opportunities for them to attend and bring their family. There's opportunities for them to bring their family to free clinics, soccer clinics, and learn how to play soccer or learn how to coach soccer. And so just a lot of opportunities for people to help us grow the game of soccer. So there's a number of economic impact and community impact initiatives that we have started, and we think will leave a long-lasting impact in Los Angeles. And
certainly. Mayor, these major events bring increased attention, but also increased pressure. So how does a city like Inglewood balance growth, infrastructure demands, and community needs during moments like this?
That's a very good question. I want to thank Catherine for correcting that circulation value of money. It is 1 billion, not 100 billion. I overstated it. But you said, how do we balance it? That's where leadership comes into play. I have run 3 police departments, been assistant general manager to the Los Angeles Airport System, ran counterterrorism, public safety, emergency management, and my education's in business. I have an MBA. And so things have to be coordinated so that you just don't have chaos. And that's one of the things I was complimenting Catherine about. Without somebody holding the wheel of the ship, then you have free for all and economic chaos. And so there has to be coordination. She's like a centerpiece of this matrix. I work closely with Karen Bass in Los Angeles. And so this isn't something anybody can do alone. You have to be a team, and you have to manage this so that the community benefits as well. One of the things that she mentioned that was so important, like before FIFA came here, we've had some FIFA matches here. Soccer wasn't that big a deal in Inglewood. It's a huge deal in Inglewood. And so we're becoming part of the international community. And the reality is now we're an international city. And with that comes pride. With that pride comes a greater sense of responsibility. And that's why I'm very proud to be the mayor. This is my 16th year here in Inglewood. And this last 10 years, more than 10 years, 12 years from reopening the forum has been a real roller coaster ride, and proud to have been here.
Absolutely. Kathy, looking forward, so we've talked about kind of brand and identity. Question is, how do you see these mega events shape the identity of Los Angeles as a global hub for sports, entertainment, and tourism?
I think Los Angeles is considered a hub for sports and entertainment. I'm seeing it as a reshaping, like I said, reshaping the narrative and reminding people about all that is good in Los Angeles. We've been pounded, as I said earlier, by all the bad stuff. So our community, our county, there's so much good stuff going on here, but that's not the stuff that moves the needle in the news. And this is a chance with these events to tell that positive story and reshape the narrative. So people do want to come here. They do feel safe here. They do know that there's a lot to do here, and they know that everybody is welcome in our community. And that's the message we want to leave behind. And I think that's how we're going to reshape the identity of Los Angeles, Inglewood, and the entire region.
All right, this is our last question. And before I get to it, I want to thank you both. This has been incredibly important and informative, and a real pleasure for myself. So let's get to it. Anyhow, recognizing that the level of global attention and investment for these events is really a once-in-a-lifetime opportunity, as we've discussed. If we're going to look forward 10 years from now, what will success look like for LA and Inglewood? What needs to happen now to ensure that we write the story of LA? Mayor Butts, let's start with you.
Well, everything's going to be about the customer experience, the fan experience. If people don't have a great time, if they aren't able to move and navigate these venues successfully, if their accommodations aren't top tier, if we're not ready to accommodate the influx of people, then, it's not going to be that great a thing to happen. We'll make the money, but we won't establish our legacy. But we get this right. It's the equivalent of a three-peat, like I said, in football, basketball, or baseball. You're known as the place. And I don't think this will be the last time that international events are here. We're branding ourselves once and for all as international cities. And that is something that we intend to make the most of.
I think Mayor Butts said it all, but I would say that we are all working together in the different communities to make sure we have a model that works going forward. So having these events and all the learnings that we're doing and new stuff that we're trying, like these fan zones that we're trying for World Cup, so that they can use them for the Olympics as a way to engage the rest of the community, because our county is so spread out. How do we take some of the excitement and everything and push it out and have opportunities for everybody to participate? And that's the model I want people to think when they're talking to Los Angeles, looking at Los Angeles for hosting events in the future and hosting them at SoFi and all the other venues that we have in the region, that they know that we know how to do these events. We can host safe and secure events. They're incredibly successful, and that everyone's going to have a great time.
Well, thank you. This has been really exciting, very informative. I can't wait to participate myself. Josh?
Yeah, thank you so much. What a great, interesting panel. So much opportunity ahead. I, for one, am definitely looking forward to it. Mayor Butts, thank you so much. Catherine, thank you so much. Mayor, it's interesting. You mentioned 400 events within 3/4 of a mile per year. I've actually been there. Well, I think all three venues had something on the same night, definitely two of them. And I was actually quite surprised at how well the traffic flow was managed. Got in and out of there relatively easily, all things considered, with my daughters. Always feel great, always feel safe. So your whole city, everybody that contributes to that continues to do a great job. So thank you for making it such a positive experience.
Thank you so much.
Well, this has been really interesting. A lot of great outlooks, a lot of great things to look forward to. I want to thank all of you for tuning in. Thank you to our panelists, our moderators. Ari, you did a great job. Thank you for your participation and helping move the conversation. I want to thank our sponsors again. I also want to remind everybody that Monday we'll have coverage of this webinar in the Los Angeles Business Journal's print edition. We'll also have a recording version of this entire program up on our website. So if you know people in your organization, in your networks, in your chains of people that you do business with, that you think would get value from listening to the program, we do always have it available on our website, and we share it on social media. It's important that we continue to spread the word and make sure that everybody is informed. So thank you all for being a part of this, for spending a little bit of your afternoon with us. And we look forward to hosting this again soon. Thank you all so much.